Hi friends, good morning. Today we are here to discuss the updates and amendments which are there in our CA Final Paper 3 Advanced Auditing. Now ICAI has came up with a revised study material which is applicable from May 2021 onwards. The May 21 onwards they came out with a new study material. Now based on that we are coming out with this amendment sheet, or actually it's not amendment sheet, it's actually a updation sheet wherein few extra topics and few extra questions which ICAI has added, we are adding it in our material. Okay, let's see this updation sheet. Now this sheet was already forwarded to you on our Telegram channel. If you are not joined my Telegram channel, please join it. CA Niket Thakur, that's the name. So this is already forwarded to you. All updates, all amendments, I put it over there. That's the first priority. And then we come out with a video which we put it on YouTube for the same. Now this is in addition to what we have already done in our class. So those who have attended face-to-face batch or video lectures, whatever we did, that remains. This is additional. Now two major updates, or you can say change. One is introduction of CARO 2020. We had CARO 2016. Now there is CARO 2020, but ICAI has came up with a notification. CARO 2020 is not applicable for May 21 exam. I repeat, CARO 2020 is not applicable for May 21 exam. Okay, it may be applicable for November 21 exam or May 22. So I'm not discussing CARO 2020 in this class. I repeat, I'm not discussing CARO 2020 in this class. I'll have a separate lecture on CARO 2020. It is not applicable for May 21 exams. And second major change is chapter of peer review and quality review. There are very small changes in that chapter, but numerous, not one, two. Many small changes are there, and that's why I'll be taking chapter of peer review and quality review again separately. Okay, so what does this sheet cover? This sheet will cover updates which are there in all chapters. All chapters update except one, CARO 2020, and second, chapter of peer review and quality review. That two are not taken. For that, separate video will be uploaded. Okay, let's begin. Now, almost small updates are there, and there are some extra questions which they've added. So there is nothing new conceptually. I'm telling you frankly, there's nothing new conceptually. We go line by line, chapter number 1. Chapter number 1 is Auditing Standards. Now, in your auditing standard, they've added two small theories. One, linkage between essays, standards on auditing, and disciplinary proceedings. Sir, what is disciplinary proceedings? Your Chartered Accountant Act, if you violate any of the clauses, you will be guilty of professional misconduct. So that clauses are the disciplinary proceedings. So linkage between essay and disciplinary proceeding. One, they have given clause 5 part 1 second schedule of Chartered Accountant Act. Okay, try to recall clause 5 part 1 second schedule. It was if you fail to disclose a material fact. If you fail to disclose a material fact which is known to you and which is not disclosed in financial statement, and disclosure of which is necessary in making such financial statement properly, then in that case, if you fail to disclose a material fact which is not disclosed, you know it, then you are guilty of professional misconduct. That was clause 5. Now actually you can also link clause 6 also. Clause 6 was fail to report a material misstatement known to him appearing in financial statement. So actually I can link clause 5 and clause 6 also. They are not given, but I can add it. Clause 6 of part 1 of second schedule can also be included. The essays also say the same thing. If you find any material misstatement, if you find any material fact which is not disclosed, you are required to report. Same is also given in your Clause 5, Clause 6, Part 1, Second Schedule of Chartered Accountants Act. They are just establishing a linkage. Next is Clause 7. Clause 7 is if you do not exercise due diligence and you are grossly negligent in conduct of duties, you are guilty of professional misconduct. Essays also says the same thing. You should exercise due diligence. You should not be negligent. Remember, Essay 240, responsibilities for fraud. If you are negligent, you will be guilty. But if you are not negligent, you will not be guilty. The same, they are trying to link essay and the clauses. So Clause 7, they are given. And third one they have given is clause number 9. Okay, clause number 9, if you fail to invite attention to any material departure from generally accepted auditing practices. Okay, if you are not following essay, clause 9 says you should invite attention. Same way, our essays also say if you don't follow essay, you are required to write it in your report. This essay is not followed. And what alternative procedures you did. The essays also say if you don't follow essay, write it down in your report. Also mention you've done an alternative procedure. That is to be mentioned. Clause 9, Part 1, Second Schedule. They also say the same thing. If you fail to invite attention to any material departure from generally accepted procedures of audit, essay is not followed, guidance note not followed, so that is to be mentioned in your report. You are required to invite attention. Clear? Linkage between essay and disciplinary proceedings. This is nothing but clauses of Chartered Accountant Act. This was one theory which is added, few small theories added, and some questions. Actually, it's not amendment, it's updates. Next, authority attached to the documents issued by institute or MCA. Now, your institute comes out with standards on auditing, guidance note, so many things they come out, and they are all mandatory. Yeah, guidance notes are not mandatory, but our standards are mandatory. Now, the level of authority attached to this document, the level of authority, whether they are applicable, not applicable, mandatory, recommendatory, the level of authority attached, simple words, whether mandatory or recommendatory, whether they are mandatory or recommendatory, have been explained by institute through its various announcement issued from time to time. But one thing, whatever standards they come out or general clarification, standard statements, general clarification. Remember introduction to auditing standards? ICAI comes out with standards, statements, general clarification. Then they come out with guidance note, technical guides. They are guidance note, technical guides, studies and other paper. They are not mandatory. But standard statements, general clarification, they are mandatory. So it is a duty of professional accountant, that is chartered accountant, to ensure standard statements, general clarification are to be followed in the engagement undertaken by them. If they don't follow it, they need to perform alternative procedure, and also it is to be disclosed in report. This standard, this general clarification is not followed. So for any reason you are not able to follow standard, You're required to perform alternative procedure. Also mention in your report this standard was not followed. This is what is given. Actually, ye hai, but extra para added. I've covered it. Now some questions. Okay, so extra questions which they have added, I feel were good. I've added here. Okay, compute overall audit risk. Now, how do I compute overall audit risk? Compute overall audit risk. Now, if you remember, audit risk has three components: inherent risk, control risk, detection risk. Now, inherent risk into control risk is risk of material misstatement. Inherent risk into control risk. Inherent risk is the chances there will be frauds and errors, assuming there are no controls. So what are the chances there will be fraud and error? That's inherent risk. Okay, out of that, somewhat may be basically prevented and detected by internal control, and somewhat may not be prevented and detected. So imagine this question, chances that there might be a fraud or error is 40% if there are no controls. Okay, the 40% is inherent risk. Out of that 40%, out of that 40, uska 75% will be prevented or detected by internal controls. Okay, ye 40 ka 75%. Okay, the 25%. 25% is control risk. 75% it will prevent, na? 25% it will not prevent. Even after putting internal controls, you're not able to catch it. Okay, so inherent risk 40%. Control risk, there are 40%. Simple, there are 40 errors. Controls will be able to detect 75%. Controls will not be able to detect 25%. So 25% is control risk. And risk of material misstatement is 40 into 25%. Your 40 ka 75% will be caught by the controls. Your 40 ka 25% will not be caught. 40 ka 25%. So 10% is the risk of material misstatement. The internal controls were not able to prevent it. There are that frauds and errors in financials. Risk of material misstatement is 40% inherent risk, 75% will be caught out of it. So 40 ka 75% caught, 40 into 25% is control risk. Risk of material misstatement 10%. Now auditor will do audit. Auditor will do audit. ये 10 जो है ना, उसमें से, तो they are telling 40% of the bills would be defalcated. Inherent risk. Internal controls can prevent 75%. So control risk is 25%. Okay. The first 40% error over there, uska 75% will be prevented. Into 25% is control risk. The risk of material misstatement 40% ka 75% we found out, only 25%. So that's 40 ka 25%, 10% is risk of material misstatement. Now out of that risk of material misstatement, auditor will be able to find, that's detection risk. Auditor will be able to find. What auditor is not able to find, that's detection risk. So they're telling audit gives satisfaction level to the extent of 60%. Okay, so whatever frauds and errors are there, auditor will be able to detect 60%. So 40% is detection risk. The detection risk is 40%. Okay, the first inherent risk is 40% already given. Control risk. Controls will be able to prevent or detect 75% errors. The 25% is detection risk. Sorry, control risk. The inherent is 40 given. Control risk is 25%. Controls will be able to prevent or detect 75%. 25% they will not be able to prevent. The risk of material misstatement, 40 into 25%, 10%. Now year 10, these are the 10% errors in financial. पहले 40% उसमें से controls found out something. तो 40 का 75% controls found. इसका 25% they could not found. 10% are there. Now auditor does audit. He will be able to detect 60% of it. ये 10 का 60. What he will not be able to detect? 10 ka 40%. So detection risk is 40%. Detection risk is 40% and audit risk is 10 ka 40%. पहले 40% error था, 75% controls only found. So only 25% remain. 40 ka 25% is 10. Out of that 10, uska 60%. Of that, ये 10 ka 60% auditor is able to find. ये 10 ka 40%. Nobody will be able to find. That's audit risk. Because of that, your opinion may go wrong. You could not find it. So out of 40, 75% prevented by controls. So 40 ka 25%. 10% errors are there. Auditor is able to find what? 10 ka 60%. How much is not able to find? 10 ka 40. That I'm not able to find, because of which my opinion can go wrong. Here I could not find it. Because of which my opinion can go wrong, that's audit risk. The audit risk is inherent risk into control risk into detection risk. Or you can say inherent into control is risk of material misstatement. Risk of material misstatement into detection risk. Hope you are clear. Next question. Question number 2. Effectiveness of control cannot rise above the integrity and ethical values of the people who create, administer, and monitor them. Tell me one thing. If your people are dishonest, and they want to make frauds or errors, if it is the people who create control, they will only keep loopholes. The people who are creating control, if they only keep loopholes, control will not be effective. That's what is written. Effectiveness of control cannot rise. Control, how much they will be effective, cannot rise above integrity, ethical values of the people who create, administer, monitor them. If the people who create controls, administer controls, monitor control, people who create control, जो controls बनाते हैं, administer and monitor them, if they are ethical, controls will work really well. But if they are only not ethical, controls will not work properly. Logical? They've given integrity and ethical behavior are the product of entities' ethical and behavioral standard. How they are communicated, how they are reinforced in practice. So people who create controls, administer them, monitor them, they should be ethical, they should have integrity. If they are ethical, they are having integrity, definitely your controls will be more effective. They'll make it well, they'll follow it well. So everybody follows control. Just a normal theory given, you can study it. Next, RIM Private Limited is engaged in business of manufacturing water bottles, and you're experiencing significant increase in turnover year on year. Okay, during the year ended 31st March 19, okay, the company carried out a detailed physical verification of inventory and PP. Okay, who carried out? Company. Company has carried out a detailed physical verification of inventory and PP. You are the auditor of RIM. The inventory as at year end is 2.25 crores. Now, this is the line. Due to unavoidable circumstances. Most important in auditing will be the last one or two lines. When you're reading question, last 1 or 2 lines, please read it very carefully. What they're asking comes from last 1 or 2 lines. Due to unavoidable circumstances, you could not be present at the time of annual physical verification. Okay. Essay 501. Attendance at physical inventory counting. So, auditor should remain attendant at the time of physical inventory counting so that he gets sufficient appropriate audit evidence about existence and condition of inventory. To get sufficient appropriate audit evidence about existence, really it is there, and condition, inventory is not damaged, I should attend the physical counting. Counting is done by management, I need to attend. Now you are not able to attend the physical counting, what would you do? Under the above circumstances, how will you ensure the inventory counting done by management was proper? You could not attend. Now what does essay 501 say? If you could not attend, you should do a physical verification, or you should attend a physical verification on an alternative date. Yes. I could not do on 31st March. Do one thing, go on 5th April. And a transaction from 31st March to 5th April, you need to check. Because you have an inventory checked physically on 5th April, you have to work back to 31st March. The transaction between 31st March to 5th April are to be looked into. So check essay 501. Okay, what do they say? The auditor, if you are not able to attend, what to do? The auditor should take or observe some physical count on alternative dates. See, the highlighted lines has to be there in your answer. If these things are not there in your answer, marks will not be there. So you need to perform, you need to take or observe. Ya to aap kar lo, management has already done, or tell management to do again, you observe. Take or observe some physical count on alternative date, and when necessary, perform alternative audit procedure to assess whether the changes in inventory between the date of physical count and year end 31st to 5th, are they correctly recorded? That you see, discrepancies are coming or not, if there, how management has dealt with it. Plus you also see appropriate cutoff procedure was followed. What is cutoff procedure? Okay, sales entered in books on 31st March, but outward register में they are dispatched on 1st April. Sales recorded on 31st, dispatch is on 1st April, तो sales recorded on 31st is wrong. इसको cut off बोलते हैं. Year is ending here. तो year end transaction 2-3 days before, 2-3 days after. The year end transaction 2-3 days before, 2-3 days after, are they recorded in a proper period? Plus take a representation from management. Yeah, essay 501 says, take a representation from management regarding completeness of information provided and adherence to the laid down procedure for physical inventory counting. They have adhered to the procedure which is there for inventory counting, and they've completely given all details to you. So simple, I'm not able to attend, do on alternative date, plus from year end till that date whether the transactions are recorded properly. Third, cutoff procedure. Fourth, management representation. Okay, if this question is 5 marks, this 1 mark is kind of intro essay number. Yeah, intro essay number is 1 mark. 4 marks for do on alternative date, from physical count date, year end to physical count date, transactions recorded properly, cutoff procedure properly applied by management, and representation regarding completeness of information, adherence to laid down procedure. हो गया 5 marks. So 1 mark intro essay number, and 4 marks, there were 4 points. Marks are for writing points, marks are not for writing stories. You write this 4 lines, 4 marks are there. If these 4 lines are not there, you written blah 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 about 501, marks will not be there. Be precise. Next, Mr. Z, who is appointed as auditor of Elite Company Limited, wants to use confirmation request as audit evidence during the course of audit. SA 505, external confirmation. You want to use confirmation request as audit evidence. Now, question, check, what is it? What are the factors to be considered by Mr. Z when designing a confirmation request? Okay, question is not what are the types of confirmation request. Don't write there's positive confirmation request, there's negative confirmation request. Positive confirmation request, the person has to reply mandatory all the time. Negative confirmation request, he has to reply only if he does not agree. Don't write full about 505. They're not asking types of confirmation request. People will write all that thing except the factors. And this is, sir, marks are not given. They'll give pure 0 only. Question is, factors to be considered when designing a confirmation request. When you're designing a letter, which are the factors to be considered? Okay, so which assertion do I need? So what I want to basically confirm, the assertion being addressed. What are the risks over here? Based on that, I'll design. What should be my layout, presentation, prior experience, whether the person replying are good person, bad person. If I know they pakka reply, they reply in a good manner, so in that case I may go for negative confirmation. But I feel people may not reply, better is go for positive only, because under positive confirmation request, if they don't reply, we do alternative procedure. Under negative confirmation request, if they don't reply, we assume balance is tallied. I need to see how the people are. If people are good people, they pakka reply for discrepancies, I may use negative. But if people are not good people, I may go for positive confirmation request. Because if they don't reply, I'll do alternative procedure here. The question is factors to be considered when designing a confirmation request. That's one question. Now there's also one more question. There's one more question. Also state. So see, you need to understand what is asked. Also state, second question, effect of using positive external confirmation request. If you go for positive confirmation request, the other person has to mandatorily reply. If he doesn't reply, we'll do alternative procedures. Effect of using positive confirmation request. Okay, so factors, these are given. They will include assertion being addressed, like balance you want to confirm, terms you want to confirm, assertion, existence hai, valuation hai. Okay, are this inventory lying with you? We are confirming existence. Are this inventories lying with you? Okay, do you have to pay 5 lakh rupees? We are confirming valuation. What are the risk of material misstatement? Layout and presentation, prior experience, method of communication. So that is also factor to be considered while designing. Whether I'm going in paper form, whether I'm going in electronic form. Management's authorization or encouragement to the confirming parties to respond to auditor. The management will encourage. If management encourages the confirming party to reply, they will reply. But if management doesn't encourage them, they might not reply. The ability of intended confirming party to confirm. Okay, ability to confirm. There are so many people. I know my customer base is such they don't know how to read English. Now if you send a confirmation letter in English, it's of no use. I know the debtors, creditors don't know how to read English. Better use local language. The factors to be considered while designing confirmation request. The assertion being addressed, risk kitna hai, layout, past experience, method of communication, management's authorization. Management is telling you to go for paper, or are they allowing you for email? And how do they encourage the confirming party to reply? And ability of the confirming party. Okay, this was basically first part of answer. Now second part, effect of using positive confirmation request. तो लिखा है positive confirmation request, the party has to mandatory reply. A response ordinary is expected to provide a reliable audit evidence, but many times they might say yes, even though amounts are not matching. Even though amounts are not matching, still they may say yes. So there's one more way. You keep the amount blank. Tell them to fill it. They have to mandatory reply, but they have to fill the amount. So many times amounts are not matching, still the confirming party confirms. वो management से बात कर ली. They called our management and they both said, okay, you just currently say yes. Okay, so many times to avoid that, we keep amount blank. The other party has to write the amount. That is called a blank positive confirmation request. Positive means they have to mandatorily reply. Done? हो गया. Next. Now see, most important is last line of question. Everywhere that will help you to understand what the question is. Initial audit engagement. We have to check opening balance. The auditor will have to satisfy about sufficiency, appropriateness of opening balance to ensure they are free from material misstatement. Lay down audit procedure to follow when financial statements are audited for the first time. Okay, so this is the first question. This is the first question. Lay down audit procedure you have to follow when you're auditing for the first time. When you're auditing first time, SA 510, initial audit engagement. I have to see previous year's figures are correctly brought forward. Opening balance does not contain a material misstatement, and the accounting policies are consistently followed. Yeah, the previous year balances are correctly brought forward. Current year's it does not contain any material misstatement. And third, accounting policies are consistently followed. Okay, this is one. So lay down the audit procedure you will follow. So I'll first check previous year's things are correctly brought forward. Now, opening doesn't contain a material misstatement. Some of the procedures of current year will help you to understand whether opening balances are materially misstated or not. Imagine opening debtor and you collect the debtor during year. I understand debtor was fine, but still debtor is not yet collected. It gives an indication it may be fake. I'm not telling it is, it may be fake. So one, lay down the audit procedure. To determine whether the prior period closing balance have been correctly brought forward, determine whether the policies are properly followed, and we evaluate based on the audit procedures performed in current period or specific audit procedure whether opening balance contains any material misstatement. Okay, now this is fine. Second question, if now the second question starts, if after performing the procedure you're not satisfied about correctness of opening balance, what you should do? If you're not satisfied about correctness of opening balance, you're auditor of current year and now you feel opening balances are wrong, still you will give a modified report in current year. Now sir, which type of modified? It can be qualified, it can be adverse. And if you are unable to obtain sufficient appropriate audit evidence about opening balance, you are unable to obtain sufficient appropriate audit evidence, then it can be disclaimer also. And if you have checked it, you cannot give disclaimer. If you have checked the things, disclaimer cannot be there. Okay, so iska answer. If the auditor obtains evidence that opening balance contains a material misstatement. Okay, so if the auditor obtains audit evidence that opening balance contains a material misstatement, he should perform additional audit procedure to understand the effect on current period financial. And if there is a material misstatement in current year financial, the auditor shall communicate with management or those charged with governance. Now reporting. If you conclude opening balance contains a material misstatement, now it also affects the current period financials, you are required to give a modified opinion, qualified or adverse. If you are unable to obtain sufficient appropriate audit evidence, then you may give a disclaimer of opinion. Oh yeah. But understand there were two questions. Ek, lay down the audit procedure you will follow when financial statements are audited for first time. That's one. And second, if after performing procedure you are not satisfied about the correctness of opening balance, how will you report? Two questions. Same was last May also. Fourth question also, there were two questions. Two things, answer that too. Don't write general things. Okay, next. Question number 6. Mr. L, while conducting audit of ABC Limited, observed that substantial amount is recognized in respect of obsolescence of inventory and warranty provision. Okay, substantial amount is recognized, obsolescence of inventory. Inventory ka value has gone down. So, wo loss and some warranty ka loss, uska provision, that has been done. Now what happens? Mr. L wants to obtain a representation letter from management to determine assumptions and estimates used are reasonable. Okay, assumptions and estimates used are reasonable. Now SA 540 is audit of accounting estimates. 540 is audit of accounting estimates. Whenever you are auditing accounting estimates, provision for warranty, inventory obsolescence, you are putting at NRV. NRV is estimated selling price minus the estimated cost to sell the product. Estimated evo. So whenever estimates are involved, auditor needs to take a written representation relating to the assumptions which are used in making estimates, whether they are reasonable or not. So management say we take a representation. We check also and we take a representation. SA 540 also says you take a representation. Now SA 580 is on representation. 580 is on representation. It says representation by management is the last sort of audit evidence. And it should not be like you take only representation, don't do anything else. You have to do your other audit procedure. They will remain as it is. But we want to take a representation. We want to take a representation about assumptions and estimates used while making an estimate. Assumptions and estimates used, whether they are reasonable or not. So that will include the representation about. Okay, the representation will be about what? Appropriateness of measurement process, like the related assumption, models used by the management, consistency of using that model. So we will take representation about appropriateness of management process. Second, the assumptions appropriately reflect management intent and ability to carry out a specific course of action. Now, pay attention. If I am hard pressed to sell my goods within 2 months only, I may not fetch full value or proper value. But if I am not hard pressed to sell in 2 months, I know COVID time tha, there was a trouble. After 2-3 months, demand will again pick up. I can sell at that time at a normal rate. Now, what is management estimating? If management is estimating we need to sell off immediately in 5-10 days, and that's why they have taken lesser NRV. But if they say no, we will sir keep it, we'll sell after 3 months, normal situation. When normal situation is there, we'll sell off. So unka NRV taken might be different. So they might assume we are going to sell in 10 days, or they might assume we are going to sell after 3 months only. Whatever they are telling, they will stick to that plan. Uska representation we take. Assumption appropriately reflects management's intent and ability to carry out the specific course of action. Disclosures relating to estimate are complete. And now, after year end, before the books are approved, no subsequent event requires adjustment to the estimate already made. You've done some estimate after year end, before books are approved. If some adjusting event is there, we may change the provision. So there are no subsequent event requiring adjustment. So we will take representation about these 4 items. Now, if this question is asked, I tell you 99% student, leave 1%, because this question you have not studied, you might not know the 4 points. So 99% student would have just written generally about SA 540, SA 580. Yeah, unless these 4 points are there, marks will not be there. So you will take representation about what? Appropriateness of the measurements process. Second, assumption reflects the management's plan. Management is planning this way, that is why they've assumed like this. Disclosures they've done appropriately, uska we take a representation, and there are no subsequent event requiring adjustment. This 4 points will carry 4 mark, and 1 mark is for this intro and SA number, SA 540, SA 580. This is just 1 mark. Actually, if someone is checking the paper of ICAI, this will be 1 mark. This is 1, 1, 1, 1. This is how marks are allocated. Now you have written only this part. Isme you have written more detail. Still it carries 1 mark. This 4 points, 1 mark each. Next. Question 7. Company is power generating company. They use coal as a raw material. Company had been allocated coal blocks in the state of Jharkhand, Odisha. Okay, so you power generating, coal is used for power generation. You are allocated coal blocks. FY 2021, a scam regarding allotment of coal block was unveiled. Remember Coalgate scam? Yeah, the Coalgate scam is nothing but scam relating to allocation of coal blocks. Okay? And this has led to ban on allotment of coal blocks to various companies including Sun Moon Limited. Okay, now they are not allocating coal blocks to you, you are banned. Okay? This happened in the month of December 2020. Production came to a halt. You stopped the production process. Many KMPs have left. Okay, the coal block allocation is banned to you. Your production is stopped. KMPs have left. Delay in payment of wages. Bank from whom you have taken fund decided not to give you further finance. Okay, so there is material uncertainty relating to going concern. Now let's see whether management has a plan to mitigate it. Now, if there's a material uncertainty relating to going concern, management has a plan to mitigate it. If it's appropriately disclosed in financial, there are material uncertainty, we have a plan to mitigate. If it's appropriately disclosed in financial, we will give a clean report, but we add a para, material uncertainty relating to going concern. So we give a clean report, we add a para. If there is a material uncertainty, management has a plan to mitigate, and that's appropriately disclosed in financial. But if there's a material uncertainty, management doesn't have, management have not disclosed appropriately. If they have not disclosed appropriately, we may give a clean report or an adverse report depending on how they have disclosed. And now if management doesn't have a plan for overcoming, the going concern assumption is not appropriate. If going concern assumption is not appropriate, then always adverse. Okay, when discussed with management, statutory auditor understood company had no action plan. Okay, company had no action plan to mitigate the circumstances. You don't have any action plan. There are lots and lots of problem. Production stopped, KMP gone, wages ka payment not done, bank have stopped financing, and you don't have any plan. Simple words, you are no longer a going concern. The going concern assumption is not appropriate. Yeah, the assumption taken by you is not appropriate. If it's not appropriate, auditor should give adverse report. Or material uncertainty, assume it chalo material uncertainty, still they have not disclosed it. If they have not disclosed it, big event, give qualified adverse. Yahan pe it will be adverse. Okay, so when adequate disclosure of material uncertainty is not made, so there is a material uncertainty, it's not done, to express a qualified or adverse opinion. In present case, this all are problems. Present case, this all are problems. Okay, so considering above, it is clear that the going concern is not appropriate. Statutory auditor should express an adverse opinion. तो प्लान ही नहीं है कुछ, तो it's not just uncertainty. So we can say going concern assumption used is not appropriate. Okay, next. Essay 705, question number 8. These are some questions added. I'm just covering. It's actually not amendment. कुछ amendment नहीं है. Simple update in the book. It's kind of updation done in the book. वो आपको refer करा रहा हूँ. Only two major change. Caro 2020 not applicable for May 21 exams, so not covered now. And chapter of peer review and quality review, small many changes. Small many changes. I'll be taking it separately. It's not covered here. Okay, question number 8. ADKS and Company LLP are appointed as auditor of PKK. During the course of audit, statutory auditor came across significant observation which they believe could lead to material misstatement. So we come to some significant observation which can lead to material misstatement. According to us, there can be material misstatement, or there is a material misstatement. Management has a different view. They don't agree. The auditor feels there are material misstatement. Management doesn't agree. So auditor feels either there are or there can be material misstatements. Management doesn't agree. If auditor feels there are material misstatement or there can be material misstatement, he should go in depth. Okay, you do audit procedure. You obtain sufficient appropriate audit evidence. After doing that, you find there is a material misstatement, qualified or adverse. If it's material but not pervasive, qualified. If it's material and pervasive, adverse. If you are unable to obtain sufficient appropriate audit evidence, unable to obtain, so either qualified, disclaimer. So if you are unable to check and if you feel the potential effect, you don't know exact effect, possible effect, material but not pervasive, qualified, material and pervasive, disclaimer. So the financial statement as a whole are not free from material misstatement, or if you are unable to obtain, auditor should modify either qualified, adverse, disclaimer. बस हो गया, यही था. So what management thinks doesn't matter. What management thinks doesn't matter. If auditor feels financials are not showing a true and fair view, auditor should modify his report. What management thinks is of no importance. Okay, next. Let's move ahead a bit fast. Question number 9. KPI is a joint venture of KPI Inc., which is US, and OPQ Limited, which is in Japan. Okay, so you are a joint venture of two companies. Two companies, they jointly control. Both the companies are abroad, but you are in India. Okay, you are incorporated in India. KPI was registered in India and is operating as a marketing support for KPI Inc. All cost of KPI are incurred in India, revenues are generated in USD, and the entire funding requirement of KPI Limited are taken care of by JV partners. Okay, so simple words mein, you are based in India, your venturers are abroad. Your venturers are abroad. The company appointed new auditor for audit of financial statements for year ending 31st March 20, and after doing all formalities, wherein auditors are required to ensure compliance with standards on auditing and international standards on auditing. Okay, they have clearly given auditors are required to comply with standards on auditing, international standards on auditing. Your venturers are staying abroad. They want audit as per international standard on auditing also. Now tell me one thing. If at all audit is conducted as per auditing standards applicable in India as well as international auditing standards, whether two reports will be given or only one? Audit is conducted as per auditing standards in India as well as international auditing standards. Two report, yeah, one. It's actually SA 700, not 705. Actually, it was given in SA 700. Okay, so we are required to give only one report, provided there is no conflict between the requirements of international auditing standards and our auditing standards. And so there is no conflict, and that audit report includes minimum all the elements which are given under SA 700. The SA 700, 11 or 12 points, that all 12 points are covered, elements of audit report. Then, and clearly mention the jurisdiction of international auditing standard. Australian auditing standards, American auditing standards, kya hai? Clearly mention. So we are required to give only one report if there is no conflict. Report includes minimum all the elements set out and clearly identify the jurisdiction. So now if this question is of 5 marks, intro is just 1. A point is 2 marks, B point is 2 marks. A point is 2 marks, B point is 2 marks. Now if A and B point are not there, you written general about SA 700, marks will not be there. So intro essay number is just 1 mark. Actual answer is main. Okay, so you're required to advise about requirement regarding audit report. Requirement regarding audit report for audit conducted as per standards on auditing issued by ICAI as well as international auditing standards. So this is actually the question. Requirement regarding audit report for audit conducted as per standards on auditing issued by ICAI and international standards on auditing. Danche, let's move it. Next, I'm just reading the highlighted line. During the course of audit, CA Omkar obtained certain audit evidences which were not consistent with the affirmation made in financial. Okay, so you found some evidences which are not consistent with the affirmation. Affirmation is nothing but simple figures which are declared in financial. तो figures के साथ that evidence is not matching. Figures के साथ evidence is not matching. क्या करो? Modified report. That is what is given. What you should do, modify your report. You have checked it. As you have checked it, either qualified or adverse. You have checked it, qualified or adverse. As he has checked the same. Evidence mila na? You got the evidence and it is not matching with the affirmation, the figures given in financials. Either qualified or adverse, depending on material but not pervasive, material and pervasive. Done. Chapter number 1 over. A few extra questions added, 2 small theories added, which were already kind of known. Chapter 2, no updates, no changes, no updates in this. Chapter 3, risk identification case steps. A new theory added. New theory added. Chapter number 3. Steps for risk identification. Okay. What are the steps for identifying risk or risk identification? So assess significance of assessed risk. Okay, first, यहाँ पे which type of risk can be there? Just try to assess. Determine the likelihood of that risk. Document the assertions that are affected. Okay, if this risk is there, this things are affected. This figure will be wrong. Valuation. Inventory may not be there. Oh, existence. Someone has stolen inventory, physically may not be there. So assertions that are affected. Impact of risk on each assertion. Identify degree of significant risk, which will be significant, which will be normal. Significant risk requires special audit consideration. Inquire and document management's response. What do they do? What do they do? Consider the nature of internal control system. So what are the internal controls placed over there to mitigate the risk? Consider any unique characteristic of risk. Consider any unique characteristic of risk. Consider the characteristic of particular item, inherent risk. Cash, more prone to theft. Cash. CCTV cameras are not there. Ye inventory is very small, can be easily stolen. So that all you try to see. Examples could include high value item, absence of paper trail, large percentage of sales coming from a single customer. Wahan pe there can be more risk. Okay, so steps for risk identification. New theory given. Answer as it is. Don't make up your answer in your own words. As it is. Assess the significance of assessed risk, likelihood, assertions which will be affected, impact of risk on each of the assertion. Then what do management do? What are the internal controls? Which can be a significant risk? Any special characteristic? Try to see inherent risk. Which areas may more inherent risk is there? These are steps to identify risks. Okay, there's a question on it. Your engagement team is seeking your advice regarding steps for risk identification. Okay, clearly the question is regarding steps for risk identification. I have to write the above answer. Oh yeah. Next. Chapter number 4. Chapter number 4. Audit in automated environment. This sheet is already shared with you on my Telegram channel, plus it's also given in the link below. The description. So when you are seeing the description of the video, what description may be, this is available on YouTube. The link of it available in the description. Okay. Small 2 points added in this concept. Enterprise risk management overview. The enterprise risk management concept is a broader concept which also includes internal control framework. The enterprise risk managing. To manage the risk, we put up controls. To manage the risk, we put up controls. The internal control framework is a part of it. That's what is written. The enterprise risk management is not intended to and does not replace the internal control framework, rather incorporates the internal control framework within it. The enterprise risk management is a broader term. Internal control framework is a part of it. And ISO 31000:2018 is a risk management standard published by International Standard for Organization. How to manage your risk, some standards. How to manage your risk, some standards are set or given by ISO 31000:2018 risk management standards published by International Organization for Standardization, and provides guidelines on managing risk faced by the organization. So this is one example. So how to do enterprise risk management. Some guidelines are given under ISO 31000:2018 risk management standards. The example, these are 2 points added under this concept. Okay, question 1. Question number 1. It's simple. 1 and 2 are very simple. You can just read on your own. 1, 2, both are simple. Just read on your own. Done. 1 and 2, simple. Read on your own. Chapter number 5, Audit of Limited Companies, Company Audit. Now, under Company Audit, disqualification of auditor, point number G. Disqualification, section 141, subsection 3. Under that, point number G, if you are in full-time employment or you're already holding audit of more than 20 companies, you are disqualified. But 20 does not include. 20 companies does not include one-person company, dormant company, small company, private limited company having a paid-up capital less than 100 crores. This is known. What is the amendment? Private limited company having a paid up capital less than 100 crores, they will not be counted only if. So they will be not counted in the limit of 20 if they have not defaulted in filing their financials under section 137 or annual return under section 92 with the ROC. If they've done a default under section 139, 137 or 92, then they will be counted in the limit of 20. They are exempted, not counted only if they have not committed a default under section 137 and section 92. Simple words, annual return, financial statements are filed on a timely basis. Then they are not counted in the limit of 20. Next, 143.3. 143.3, 10 points. We have to report mandatorily. Now, there is an amendment. Actually, amendment is under section 197. Yeah, amendment is under section 197. 197 किसके लिए था? Managerial remuneration. Correct. The limits of managerial remuneration, 11% of net profit, 5% of net profit, 10% of net profit. याद है? Overall managerial remuneration 11%. Single managing director, whole time director 5%. All managing director, whole time director together 10%. वो limits थे ना? तो the remuneration paid basically is in accordance with the limits which are laid down. That what we are required to report. So this amendment, and they've inserted section 197 subsection 16. Section 197 subsection 16. Section 197 subsection 16 wants this reporting. The auditor shall in his report under section 143, so we'll add in 143.3 or 10 May 11th matter is added. Make a statement as to whether the remuneration paid by the company to its directors are in accordance with the provisions of this section. Whether remuneration paid to any director is in excess, give such details as may be prescribed. Hope you're clear. The remunerations are as per section 197. This is what we are required to report now. Under section 143 subsection 3 what 10 matters, the 11th one is added. Actually this we had already discussed in class. So this came in 2018. We already discussed. This was discussed for private limited company. This was discussed. This all was discussed, but still I'm giving it. CARO 2020. It is given in a separate material, but it's not applicable for May 21 exam. I'll come up with a separate video on CARO 2020. Wait for the right time. Next, Constitution of Nafra. Constitution of Nafra. Now, central government has constituted Nafra, and Nafra will be giving a recommendation to central government on formulation of auditing standards and accounting standards. So Nafra will recommend, central government will approve auditing standards, accounting standards. Now, this role of Nafra, this was there. This already given in our material. Role of Nafra: make recommendation to central government on formulation of accounting and auditing policies and standard. Monitor and enforce the compliance with auditing and accounting standard. So you monitor and make the companies follow it, and you oversee the quality of services of professional associated with ensuring compliance with that standard. The chartered accountants, whether they are doing the work properly or not, are they checking accounting standards, auditing standards, are they following? So they can oversee the quality of our services also. And if we are not working properly, Nafra can take actions against us. So this was already there. Now what is newly added is Nafra Rules. We have this Nafra Rules 2018. Now in our material Nafra Rules is also covered. यहाँ पे थोड़ा detailed है. We already covered Nafra Rules. This is bit detailed. The Nafra shall have power to monitor. They have a power to monitor auditors of following classes of company and body corporate. This is important. So whether auditor of all companies Nafra will see? No, Nafra has a power to monitor and enforce compliance with accounting standard, auditing standard, oversee the quality of services, or undertake investigation of auditors of following classes of companies. One, the listed ones. Second, unlisted public companies, not private, public. Paid up capital 500 crores or more, or turnover 1000 crores or more, or outstanding loans deposit 500 crores or more as at 31st March previous year end. So one, listed. Unlisted public companies which are huge, paid up capital 500 crores or more, turnover 1000 crores or more, outstanding loans or debentures 500 crores or more. Any word is or in between. Insurance companies, banking company, electricity company, companies governed by special act. Banking, insurance, electricity, companies governed by special act. Body corporate or company or a person, reference of whom is made by CG. If CG is referred to Nafra, Nafra has a power to monitor, take actions against their auditor. And E, imagine there's a company falling here. There's a company falling in A or B. Assume chalo A, B, C, D, anything. Company falling in A, B, C, D, anything. They have a subsidiary abroad, or they have an associate abroad. There is a company falling in A, B, C, D. They have a subsidiary or associate abroad, and it's a material subsidiary or associate. So 20% of consolidated income minimum comes from there. 20% of consolidated income or 20% of net worth consolidated comes from there. So any company covered in A to D above, they have a material foreign subsidiary or material foreign associate. Material कब बोलेंगे? आपकी consolidated income का 20% comes from there और consolidated net worth का 20% comes from there. Okay, then Nafra will have a power to monitor and basically take actions against their auditors also. So body corporate, incorporated or registered outside India, incorporated or registered outside India, which is a subsidiary or associate of, a company referred to in A to D. The company is covered A to D, uska material foreign subsidiary or material foreign associate. That's getting covered. This is important. The Nafra has power to monitor, enforce compliance with accounting standard, auditing standard, oversee the quality and undertake investigation of auditors of following classes of companies. Okay, company, once they appoint auditor, they have to file form Nafra 1. Once you appoint auditor, file form Nafra 1. And auditor has to file a return with Nafra on or before 30th November every year. That will be Nafra 2. The company will tell to Nafra 15 days may after appointing through Nafra 1. Auditor will file a return with Nafra by 30th of November. That's Nafra 2. And sir, I was covered in the list. Now I am not covered. Okay, you are covered, now you are not covered. Still for next 3 years, Nafra can have a check on you. So, Nafra rules shall continue to be, the company shall be continue to be governed by Nafra for a period of 3 years after it ceases to be listed or falls below the limit. After you cease to be listed or you fall below limit, still 3 years tak you will be covered under Nafra rules. Okay, this is fine. This is also fine. So how do they monitor and enforce compliance with auditing standard? You can just read it. How do they monitor compliance with auditing standard? You read it. How do they oversee the quality of services and how do they suggest measures for improvement? The Nafra may direct the auditor to take something, take some measures, etc. So this is a self-study. You can just read it for once. Punishment. Okay, so Nafra 1 is to be filed once auditor appointed. Auditor has to file Nafra 2 before 30th November every year. Now, penalty if not done. The company has to file Nafra 1. Auditor has to file Nafra 2. The penalty can be on company also, auditor also. I repeat, company has to file Nafra 1. Auditor has to file Nafra 2. The penalty can be on company also, auditor also, anyone. Okay, so they are telling the company, every officer in default or the auditor shall be liable for penalty as per section 450 of the Act. Okay, that is given. Now, if auditor is proved guilty, where professional or other misconduct is proved, Nafra has a power to make an order for penalty. If it's an individual, this is individual, this is firm. Minimum penalty 1 lakh, which may basically extend to 5 times the fees collected. If it's a firm, minimum penalty 5 lakh, and which can extend to 10 times the fees collected. Plus debarring the member or the firm. Okay, this was penalty. Now they may debar you from being appointed as auditor, statutory auditor, internal auditor, any auditor, or performing any valuation under section 287. Minimum 6 months, maximum 10 years तक they can debar you. Okay, so if at all auditor is proved guilty of professional misconduct, Nafra can also take action. Auditor proved guilty of misconduct, Nafra can also take action. What actions Nafra can take? This is the answer. Okay, so which classes of companies Nafra can monitor? That's given earlier. If auditor proved guilty, what actions Nafra can take? These are the actions. Done. This is Nafra Rules. IPF. Your section 123 to 127, in that 125 IPF. Now there's one amendment. In our material I have written, no claim shall lie against IPF. Okay, if your money goes to IPF, you don't claim it for 7 years, company will transfer to IPF dividend money. We had written a material, no claim shall lie against IPF. Now that is changed. So if at all you did not claim your dividend money and after 7 years company has transferred to IPF, you can claim from IPF also. So after 7 years your money has gone to IPF, still you can claim from IPF. Any person claiming to be entitled to the amount may apply to the authority constituted under the fund for the payment of money claimed. You can apply to IPF also. Okay, next, this was one theory added in our book, in ICAI book. I've just added it. Determinants of dividend policy. Okay, so company will declare more dividend or less dividend. Uske, what are the determinants? One, how is the nature of earning? If the earning is stable, they will have a stable dividend policy. Reinvestment alternative. If they have a good reinvestment alternative, company needs fund, they can start a new manufacturing plant, they will not declare dividend. Liquidity position. Profits hai, cash bhi chahiye na. How is the liquidity position? If liquidity position good, they declare dividends. New capital requirement. Tax bracket of shareholders. Oh, my shareholders are all in 30% tax bracket. I may not declare dividend. See, now, earlier dividend was exempt in the hands of shareholder. Company was paying DDT. Earlier. Now DDT concept gone. Earlier, dividend was exempt in the hands of shareholder. Company was paying DDT. DDT basic rate 15% plus surcharge, burcharge, etc. all was there. So if shareholders tax bracket was 30, company coming out with dividend paying around 18-20% DDT, it was feasible. But now DDT concept abolished. Shareholders will pay dividend ke upar tax. They will pay tax on their dividend. So these are all some determinants of dividend policy. If question comes, these are the points you need to write. Verification of dividend. This is already there in our material. There's no change. The way ICAI has answered is different. Points upar niche kiye. So this is a self-study. There's nothing new. This is already there in our book, but this is different way they have written, and I always prefer to write answer in a manner ICAI writes. Very simple. If they write in this way, I should write in that way. Don't argue, sir, wo wrong hai. No, that's not wrong. That was also ICAI solution. So we have verification of dividend in our material. That's also ICAI solution. That's an old ICAI solution. There's a new ICAI solution. Follow latest solution of theirs. So there are no changes. Some 1 or 2 points they might have added, but they're just the way they've answered is different. Bas. So you have to do on your own this thing. Okay, illustration number 1. Illustration number 1. This is on schedule 3. Okay, division 2, schedule 3. Company is following in days. Division 2, Schedule 3. Company is following Ind AS. Okay, comment on the following. PP includes 2.5 crore for boiler plant under construction. Now, if it's under construction, it should come under capital work in progress, and there's a separate heading on face of balance sheet. Separate heading on face of balance sheet, capital work in progress. Don't put it in PP. The boiler plant should be coming under capital work in progress, separate heading on face of balance sheet. Division 2. Ind AS balance sheet mein capital work in progress is on face. Don't put it in PP. Cash and cash equivalent include 1.25 crore deposited with Nationalized Bank for 18 months. It's shown under current asset. Now, deposits for more than 12 months. If you just go to Division 2, they've clearly written deposits for more than 12 months should come under other financial asset under your non-current asset. The non-current asset, other financial asset. So it should be disclosed under other financial asset under non-current asset. Third, non-current asset include caption biological asset other than bearer plant. Okay, the non-current asset may you put biological asset other than bearer plant. Bearer plant is a part of PP. Bearer plant, part of PP. What is bearer plant? Plant remains, which will give you fruits. You don't take out the plant, you take the fruits, and it will be beneficial for many years. Mango tree, coconut tree, they are all bearer plants. Okay, the non-current asset include biological asset other than bearer plant. You spent 1.5 crore cultivation of what? Cashew nut trees, which will give you a yield for 10 years. Your cashew nut tree may I have spent and I'll be getting yield for 10 years. It's a bearer plant. Plant will remain, I'll get fruits for 10 years. It's a bearer plant, should come under PP. Yeah, so they have included in non-current asset, biological asset other than bearer plant. No, this is a bearer plant. Take it under PP. Okay, it should be under the heading PP as bearer plant. Next. Okay, you have 5 subsidiaries. Two subsidiaries are not doing well. There might be a decline in value. Okay, so you have 5 subsidiaries valued at cost. 2 ka net worth have eroded. Okay, company did not provide decline in value of 2 subsidiaries because overall portfolio there is no decline. Okay, 2 are not doing well, 3 are doing well, but I tell you, impairment I have to consider individually, not portfolio wise. Okay, as per Ind AS 27, separate financial statement. As per Ind AS 27, separate financial statement, you can show investment in subsidiaries either at cost or as per Ind AS 109. As per Ind AS 109 will be FVTPL or FVT-OCI, voila. So either at cost or as per Ind AS 109. We are showing at cost, that's fine. Okay, if you are showing investment at cost, as per Ind AS 36, impairment is to be checked whenever there are indicator. Though ke net worth have eroded, I have to test for impairment. If there's an impairment loss, it has to be recorded. So don't see on overall portfolio, individually is to be considered. The 2 of the subsidiaries have the net worth eroded. Chances of recovery is bleak. There is an impairment existing. K should provide for impairment. K Limited should provide for impairment. Done. This is over. Next chapter. Chapter 7. Audit Committee and Corporate Governance. Audit Committee, and Corporate Governance. Now the first point is important. Actually all important I've written. If something is important, it's written only to you. So you don't have to find out what's important or not, it's given to you. Resignation of statutory auditor. See, many times auditor resigns and then to find new auditor, deadlines are on hand. So I know shortly audit report is to be given, ye deadline hai. Now this auditor goes away. To find a new auditor becomes difficult. A new auditor coming, he has to complete audit in short time. Audit will not be done properly. So that's why SEBI has came out with a amendment. SEBI LODR regulations have been updated and new provisions are added for resignation of statutory auditor. This is only for listed companies. SEBI regulations are only for listed companies. Okay, the resignation of statutory auditor. Resignation of statutory auditor from listed companies and their material subsidiaries. Okay, this is only for listed companies and their material subsidiaries. Okay, what's a material subsidiary? Consolidated income mein their income is 20% or more. Consolidated net worth mein their net worth is 20% or more. That's a material subsidiary. Okay, so I repeat, whenever auditor resigns, suppose he resigns very late, new auditor coming, he has a deadline, he can't do the audit properly. That's why some rules have been put up. Okay. The conditions to be complied with upon resignation of statutory auditor are as under. So SEBI LODR regulation came up with something new which is as under. This is most important. A point. All listed entities, material subsidiaries shall ensure compliance with following condition. If auditor resigns within 45 days from end of quarter. Okay, within 45 days from end of quarter. Say for example, first quarter ends in 30th June. April, May, June, first quarter. Okay, the first quarter ends in June. If you resign within 45 days from end of first quarter, you have to finish the first quarter ka review. Yeah, listed companies have quarterly review. So 4 reviews are there. You have to complete the review of that quarter and then go. So if auditor resigns within 45 days from end of quarter, quarter ends in June. If you want to resign within 45 days after the end of quarter, quarter end के पहले चले गए, fine. Quarter end के बाद जा रहे हो within 45 days. If you leave in 1st July also, you can't leave. Finish up that quarter review, then go. If auditor resigns within 45 days from end of quarter, the auditor shall, before such resignation, issue review report for such quarter. You have to finish that quarter and then go. Okay, if auditor resigns after 45 days from the end of quarter. Okay, first quarter ended in June. July 31 days, 14 days August. Okay, if you want to resign after 15th August. If you want to resign after 15th August, not allowed. Finish Q1, finish Q2, then resign. So if you want to resign after 15th August, finish Q1, finish Q2, then resign. So if you resign within 45 days from end of quarter, quarter ended in June, you want to resign till within 45 days, 31 days of July, 14 days of August. If you resign till 14th August, okay, you have to finish this quarter, which is already over. But if you want to resign after 14th August, then you are not allowed. Finish Q1, finish Q2, then resign. And if you have already done a review, if you already done an audit or review of Q1, Q2, Q3, if you already done audit or review of Q1, Q2, Q3, you have to mandatory finish Q4 and the full year. Q4 and effectively give the audit report of full year also, then only you can leave. So if you've already done Q1, Q2, Q3, you have to mandatorily do review of Q4 as well as give a audit report for full year as well, then leave. So if you want to resign within 45 days from end of quarter, complete that quarter. If you want to resign after 45 days from end of that quarter, finish that and the next quarter. तो रिजाइन नहीं कर सकते हो 15th August if I want to resign, Independence Day, let me be independent from this company. No, you have to finish the earlier quarter and this quarter, June, July, August, September wala. So you can't resign till you finish that July, August, September quarter. So means quarter will end in September, October mein you finish and then you leave. Okay. So proposed date of resignation. This is the proposed date of resignation. Suppose 15th May. 15th May within 45 days from end of last quarter, last year ka Q4. Last year Q4 within 45 days. So ye first quarter, last year full. So within 45 days from end of last quarter. तो वो लास्ट क्वार्टर आपको फिनिश करना है. ओके, इफ आई रिजाइन विद इन 45 days फ्रॉम एंड ऑफ क्वार्टर, आई हैव टू जस्ट कंप्लीट द प्रीवियस क्वार्टर, नॉट द करंट वन, प्रीवियस क्वार्टर. तो विद इन 45 days 15th May तक आई वांट टू रिजाइन, आई कैन रिजाइन, आई हैव टू फिनिश लास्ट ईयर का Q4 लास्ट ईयर फुल. इफ आई वांट टू रिजाइन 16th May के बाद, इफ आई वांट टू रिजाइन 16th May के बाद, तो व्हाट विल हैपन, वो लास्ट ईयर का Q4 था, लास्ट ईयर फुल था, करंट ईयर का Q1 ऑल्सो आई हैव टू डू इट, बिकॉज व्हेन यू आर रिजाइनिंग आफ्टर 45 days, तो जो प्रीवियस वाला था वो प्लस ये वाला जब तक फिनिश नहीं होगा यू कांट गो. ओके, 14th August तक यू कैन रिजाइन, Q1 करना है. 15th August के बाद यू वांट टू रिजाइन, Q1, Q2 विल बी मैंडेटरी. दिस ऑलरेडी डिस्कस्ड. एंड इफ यू ऑलरेडी डन audit or review of Q1, Q2, Q3, mandatory Q4 and full year has to be done by you. Mandatory. Okay, so this is just that whenever this auditor goes, new one suddenly lana, he doesn't have time, deadlines on there, usko avoid karne ke liye this thing is brought. And our auditor also cannot abruptly leave. I have done Q1, Q2, Q3. I have to finish Q4 full year and then only I can leave. The auditor also cannot abruptly leave. Uske liye. Hope you are clear. If you resign within 45 days from end of quarter, I just write here. Suppose your quarter ended on 30th of June 21. If you resign within 45 days till 14th August. If you resign till 14th of August, you have to just finish the earlier quarter. So you have to finish Q1. But if you resign after 14th August, so you have to finish Q1 and Q2. So 1/4/21 to 30th June, this was over. If you resign within 45 days, just finish this quarter. From end ke baad within 45 days. If you want to resign after 45 days, you have to finish Q1 and Q2. So you can't resign on 15th of August. They don't allow you. Okay, next. Other conditions relating to resignation. You're resigning because you're not getting information. Management not giving you information. Because of that, you are resigning. What to do? You have to tell about it to the audit committee as well as to the chairman. The chairman of the audit committee, you tell, sir, they are not giving me documents because of which I'm considering now resignation. That all is to be given. And if they don't give you information and still you're reporting, give disclaimer of opinion. Okay, this is fine. And this is to be included, the about thing. If you resign within 45 days, you have to complete the quarter. If you resign after 45 days, that quarter, next quarter, both has to be completed. This should be put up in terms of engagement. This should be put up in terms of engagement. And practicing company secretaries certify compliance by listed company. The listed company has complied with above provision. Practicing company secretary will certify. Now, obligation of listed entity and material subsidiary. Format of information to be obtained from auditor upon resignation. If auditor resigns, you have to obtain information in a specific format. Cooperation by listed entity and material subsidiary. If auditor needs some data, documents, cooperate, give it. And audit committee's view. If auditor resigned, audit committee has to give their views to stock exchange not later than 24 hours after the date of such audit committee meeting. So one, listed company and the material subsidiary has to obtain information from auditor who is resigning in the format given. They have to cooperate with the auditor if he asks any documents, etc. And if auditor has resigned, उसके बाद there's audit committee's meeting. उसके views, audit committee के views has to be given to stock exchange within 24 hours after the date of such audit committee's meeting. This is if auditor resigns. If auditor becomes disqualified, this all does not apply. The above things is auditor resignation के लिए. It is for resignation, not disqualification. Resignation. If auditor becomes disqualified, this all will not come into picture. Clear che? Next. We have few questions. Auditor resigned on 10th July. Quarter end, uske within 45 days you finish that quarter. Q1 you need to finish. Q1 he has to finish. He resigned on this. Whether he will be liable to give report for Q1? Yes. He will be liable. Okay, second is interesting. Second one is interesting, important. You signed a review report for second and third quarter. You signed review report for second and third. Would you be liable to give report for fourth quarter? Answer is, you've done second and third. Are you be liable to give fourth and full year? Would you be liable? Answer is no. What was the theory given? If you've done first, second, third. Check theory. If you've done first, second, third. यहाँ पे, if the auditor has signed limited review audit report for the first 3 quarters, then you have to do the last. If you've done first, second, third, तो पंक्का last करना है. I have not done first. I have done only second and third. First, someone else was there. He resigned, I came. So now I have done only second, third. Is it mandatory for me to do the fourth quarter? No. If I have done second and third, do I need to do fourth? Answer is no. Okay, this is done. Now few small addition. One point in any topic is added, like I have written. Yeah, but the below points are added to the points already there. Just one point which are added, you can read on your own. Yeah, there's nothing difficult or technical in this. Just one point added, you can read on your own. Actually, this was also given in book. Like 2020 say this will become 7, earlier was 8. Book mein it is already there. Our material I already given from 2020, this will become 7 companies. It's there. I've just given here again separately. This point, next point, information, this all is to be done by you. Other disclosures. Other disclosures. Now, There's a point of other disclosures under SEBI LODR regulation. And in that other disclosures, we disclose about related party disclosures. There were 3 points actually. One of them was related party disclosure. This is added. So we have to now give disclosure of events or information which according to board of directors is material. The information relating to events or information, the disclosure of events or information, not information of events, disclosure of events or information which according to board of director is material. That has to be basically disclosed. So this is addition. Okay, question number 3. Question number 3. Now, board of directors have laid down code of conduct for all board members and senior management. Okay, they have laid down code of conduct, and every year the board member and the senior management has to give a confirmation that they have complied with the code of conduct. The company has a code of conduct for board of directors, senior management. Board of directors, senior management has to give a affirmation telling that they have complied with code of conduct. Now, the auditor is provided with annual compliance affirmation from the board and explain that since there is no change in composition of senior management, the previous year's affirmation may be considered valid. Okay, the senior management had given affirmation last year. This time there is no change in senior management, so they are not taking again an affirmation. This is wrong. Every year they have to give an affirmation that they have complied with code of conduct. Here the previous year's affirmation may be valid. No, they are not valid. Okay, next, vigil mechanism. Vigil mechanism, if something wrong is going on, you can tell that's a vigil mechanism. Okay, now vigil mechanism ke rules, regulations, whatever are there, vigil mechanism related thing, you have to disclose it on your website and the board report. What issue came, what was the action taken, everything you have to put it on your website and board report. Company has put it only on the intranet, accessible by directors and employees. See, when you put something on website, everybody can see. When you put something on BOD report, everybody can see. It's a part of annual report. But when you put something on intranet, only your employees, directors can see. This is not valid. It is to be put up on company's website and the board report. Same, you have some internal complaint committee under Sexual Harassment of Women at Workplace, Prohibition, Prevention, Redressal Act, POSH Act. The details of committee are available on company's intranet. No, you have to give the details about it, not on intranet but on website as well as the BOD report. So this is again wrong. Important, this question. As per Schedule 5 disclosures in Sexual Harassment of Women at Workplace Act, you have to disclose number of complaints filed during the year, disposed, pending, how many are there, and also the details you are required to put it on your website. Yahan pe you just put it on intranet. That is not correct. Done? Okay, this was chapter number 7. Going to chapter number 8. Okay, chapter 8. You are auditor of parent. Imagine you are a parent's auditor. You have to give report on this consolidated financials. You are auditor of a parent. You have to give report on standalone as well as the consolidated financials. You are an auditor of parent, holding company. You have to give report on standalone as well as the consolidated financials. Now, pay attention. If subsidiaries auditor had given a modified report, we were required to write about his modification in our report also. If subsidiaries auditor has given a modified report, when we are reporting on CFS, we have to write about his modification in our CFS report. Earlier, the wordings in ICAI book was irrespective of materiality. So whether that was material to CFS or not material to CFS, if subsidiaries auditor has given a qualified report, you write about that subsidiary auditor has given modified report for this point in CFS. Now they say you consider the concept of materiality. If material, then you write. Otherwise, no need. So while considering observation of component auditor, subsidiaries auditor, the concept of materiality would be considered. While considering observations of component auditor, note, earlier in ICAI material, it was given concept of materiality will not be considered. So whether it's material, not material, they have given modified report, write about that modification in CFS report. But now write only if it is material. This was actually a mistake in ICAI book, they rectified it. Now they've rectified. Whatever was given in ICAI book, I had given the same in our book. So our book also, earlier we have written concept of materiality will not be considered. Now concept of materiality will be considered. Next, illustration 1. तो see, कोई amendment नहीं है यार. Simple update, few extra question. H Limited is an investment company. As per Ind AS 110, investment companies are exempted from preparing CFS. They don't need to prepare CFS because they have done investment that's routine for them. Provided they measure their investment in subsidiaries at fair value. Okay, they have investment 25% in S1, 50% in S2, 60% in S3. Whether they are required to consolidate, answer is no, provided they meet the criteria, they value it at fair value through P&L. The investment entity shall not prepare CFS if it is required in accordance with 110 to measure all of its subsidiaries at fair value through P&L. What is investment company? They have just explained. So you can just read the answer. It's simple. This is chapter number 8. I'm going for chapter number 9. This is just one line added in stress testing, Basel III framework. So you can just read this. Basel III framework is related to capital adequacy. They tell about the capital adequacy measures. What are the benefits? So improves the banking sector's ability to absorb shock. So problem coming, banking sector can absorb the shock, improves risk management, strengthens bank transparency and disclosure standards. So this is just something which is added. These points were earlier not there. So if question comes, what is the aim of Basel III framework? This will be the answer. ABC. The Basel III norm relating to capital adequacy, the purpose is to improve banking sector's ability to absorb shock, improve risk management and strengthen the bank transparency and disclosure. Then additional question. Okay, question 1, mark it as important. Okay. You have sanctioned credit limit of 100 lakhs to Messrs. Walcott Limited. Okay, so there's a sanction credit limit 100 lakhs to Walcott Limited. It's due for renewal on 1st September. Okay, so credits you have given like OD facility or cash credit facility, they need a renewal. The renewal is due on 1st September 19. till 31st March 20, renewal has not been done even though 180 days are over. If you don't renew in 180 days, okay, 1st September 19 it has to be renewed. Renewal date gone. 180 days tak renew nahi karo, then account is treated as NPA. If deadline gone, uske baad 180 days you don't renew, account is treated as NPA. Okay. So then we say it's out of order. Yeah, so it's NPA. Bank says renewal process has been initiated on time. Okay. Renewal process initiated on time. Most of the documents are received. Account is operated regularly. Balance is within drawing power. Okay. So now they're telling renewal process has been initiated on time. Most of the documents are received. So problem kya hua? It also shows letter from Walcott stating due to sudden death of their auditor. Okay, there's a letter from Walcott that sudden death of auditor, new auditor had to be appointed, and that's why it took some time. Okay, so most of the documents given, renewal process is also started timely, but when renewing we need financial data. We need data. The company ka auditor, Messrs. Walcott Limited, unse we need some data. Their auditor has suddenly expired. New auditor came. Usme bhi time lag gaya. ठीक है. The limit was not renewed till year end. However, the financials are received on 10th April. 10th April and renewed immediately. So should you classify it as NPA on 31st March? Okay, should you classify it as 31st March May NPA? Now, if I strictly see the rules, due date gone, 180 days may not renewed, it's NPA. Due date gone, 180 days not renewed, it's NPA. But if I just see over here substance, due date gone, 180 days may not renewed, okay, actually NPA, but renewal process was initiated timely. Most of the documents have been received. Account is within drawing power. There's no problem in the account. Their auditors expired. They had to find a new auditor. New auditor will come. They will give data. Uske baad renewal will happen. So this was a kind of bit problem coming, which was beyond their hand. So if I go substance wise, if I go just 180 days gone, it's NPA. But if I go substance wise, I can say it should not be NPA. And if you remember event occurring after the balance sheet date, okay, 31st March tha, but before the books are approved, 10 days mein, 10th April, we have got the financials, renewal is done. If I consider event occurring after balance sheet date, it should be adjusting. Circumstances were prevalent. 31st March we knew renewal karna hai, most of documents aa gaye. They said, sir, letter bhi they had given. They had given a letter, sir, our auditor has expired, we are giving you ASAP. So if I consider all this based on event occurring after balance sheet date, I can say it's adjusting event. If I consider substance, I'll say it's not an NPA. If I strictly go by 180 day rule, it's NPA. As per the guidelines of RBI, account should be classified NPA if renewal is not done in 180 days. However, in present case, operations are excellent. They've given a letter. They've shown a letter from the company that due to certain reasons the financials are delayed. Limit has not been renewed, but before the signing of report. But it's just an adjusting event under AS4. It's also a matter of substance over form. Better classify it as standard. Okay, done. Question 2 important. 1 and 2 both are important here. Okay, you are auditing a small bank branch. Small bank branch. They have manager, cashier, 3 people, 3 other staff. Allocation of work. How is the allocation of work? S1 is a peon who opens the mail forward to the concerned person. Yeah, peon opens the mail and sends to concerned person. Not correct. There has to be authorized person for opening the mail. Peon. And he does not have a signature book to check the signatures of important communication. Like there is something coming from other branch, say DD coming from other branch, any communication. So whether that's from a genuine person or not, एक signature book होता है. Like say for example, Mysore branch manager sent a letter here. So whether it's really from Mysore branch manager or not, we have a signature book wherein Mysore branch manager signature will be there. We can compare with the letter. The letter and the signature book mein are they matching? So peon is opening the letters, that is one thing wrong. He doesn't have a signature book. The letters, whether they are coming from authorized person or not, they are not being checked. Second, S2 has possession of all bank forms. Checkbook, demand draft, pay order, traveler's check. The S2 has possession of all bank forms. He maintains records meticulously, carefully, which you have test checked. Okay, so we have checked it. He maintains records properly. But I tell you one thing, as per the banking rules or internal controls this all bank forms, checkbook, DD, pay orders, traveler's check should be maintained by one person, and an authorized official should verify on a test check basis. Auditor checking nahi, आपका ही officer should also be checking. That is missing. That is missing. And you are informed. तो यहाँ पे लिखा है, however, no one amongst the staff checks that. That is wrong. Authorized officer should be checking it on a regular basis. आपने check किया, that's okay. He maintains record, good, that's okay. But I have to, staff में से some other person should also check. You are informed that being a small branch with shortage of manpower, it's not possible to check all the things. Yeah, small branch, it's not the excuse. Okay, the mail should be opened by responsible officer. Signatures on all letters received from other branches should be checked by an officer with signature book. Second wale mein, all bank forms should be kept in possession of an officer, and another responsible officer should verify the same. Another responsible officer should verify the same. And contention that bank is a very small branch, it's not tenable, because such lapses can lead to frauds. This is your chapter number 9, banks. Okay, we do one thing. We keep it up till here now. From chapter 10 onwards, I take it in another part. So this session will be in 2 parts. Part A, which we did. Part B will start from chapter number 10. So these are all updates which are applicable from May 21 onwards. So ICAI has amended the book. Bit additions they have done, few questions, few theories they have added. Major change are 2, Caro 2020, and many small changes in chapter of peer review, quality review. So Caro 2020 peer review, quality review is not covered in this sheet. That will be provided to you separately. Yes, and uska video also will come up separately. Okay, keeping it up till here, and just one sentence for you. Faith can move mountains while doubts can create them. So if you want to move mountains, if you want to do difficult of the things, faith can move mountains. You need to believe in yourself. If you believe in yourself, even the difficult of the things can be accomplished, while doubts can create them. The faith can move mountains while doubt can create them. So if you constantly doubt yourself, sir, I can't do it. मेरे से नहीं होगा, नहीं होगा, नहीं होगा. I पक्का know this attempt I won't be able to give the exams. Sir, my preparations will pakka never be completed this attempt, May tak. Then you will never be able to do it because you're constantly doubting yourself. Believe in yourself, move ahead, make sure you are giving your 100% in preparation. don't doubt yourself on daily basis. And our simplest thing, after doing something today, don't try to think after 2-3 days whether I remember that. Many people, they have a habit, when I studied something, after 3-5 days I try to remember. Don't doubt yourself, it's there in your mind. You might not be able to recall it now, but exam time you'll again refer all things, then you will go, you will be able to recall it. All the best, bye bye, take care, see you. We'll do part B next class.